Hey, everybody. Welcome back. It is an absolutely sunny Wednesday. It is the Wednesday after Easter. We're all coming down after our chocolate high. I hope the Easter bunny was good to everybody. I'm back here with my main man, Geoff, who's looking really good today. So it must have been an amazing long weekend for him. The Easter Bunny must have brought him a bunch of chocolate. We got a
Mhm.
lot of stuff to get into today, so let's get it at her, Geoff. How you doing, buddy? How was your Easter?
Easter was good. It was quiet and not there was actually more chocolate than I would have liked, but I have a I cake and chocolate are my kind of my weakness. So if there's any kind of cake or any kind of chocolate in my house, you will be seeing me roughly around 2:30 in the morning creeping into the kitchen and cutting myself a piece of cake or eating chocolate. So honestly, it was great, but I just realized I'm weak. So I just can't have that in my house, or I'm just constantly got that sweet tooth. So yeah. So anybody, if you ever come to my house, do not bring sweets, do not bring cake, do not bring chocolate. Um, Even though that I tell you to please bring it, please don't.
No, still bring it though. Still bring it. Geoff just says that. Still bring it. He won't turn it away. He won't
Oh,
turn
well,
it
I
away
won't. I
if you
won't
do.
turn it away, but you got to take it home with you, like
Right?
at the end, right? Yeah.
As he tackles you down the driveway when you try to do that.
Those
Got you.
little those little mini eggs. I bet you I ate probably. It felt like about 55 of them in about 30 minutes.
That's
Just
awesome. You know what's
wow.
funny? So my kids, right? Ages 12 or 15 and 12, soon to be 16 and 13, right? Um, they still wanted us to hide the eggs and do the Easter egg hunt and all that sort of stuff, but we were not allowed to take any pictures, and we were not allowed to tell anybody that we did this. Haha, guys, I told the whole world on this podcast that we
Wow.
did it. But yeah, because they're too cool now, right?
Yeah.
They're too cool for that to happen, but they still want it to happen. So
Yeah.
the wife and I, we were so happy to do it. We were laughing so hard watching them do it and watching them race. And so our daughter Lizzie, she won. And she was like, and so she's absolutely me, right? She goes to her brother, Case, the older one. How does it feel to get beat by not only your little sister, but a girl?
Yeah. Little instigator. Little instigator.
Oh my God, God bless her.
I know it's funny, my mom. I was talking to my mom. I talk to her every other day. She's like, "Are you gonna color Easter eggs?" I'm like, "What? What? No, I'm not gonna color Easter eggs, Mom. Like, I'm 54 years old. I'm not gonna go
Right?
Easter eggs. Who am I gonna color them for?" She's like, "Oh, I just thought I'd ask." I'm like, no, not
Oh
me."
man. The memories, right? That's what I was saying. That's what makes Easter fantastic is these little memories, man. These little memories. But that's awesome, man. Well, we got a lot going on. There's been surprisingly, it's getting busy. Just so everybody knows, it is getting busy. But my did you know is actually very interesting because it is busy in some places, but in this market, it just may not be. So, Geoff, did you know Metro Vancouver is on track to see its highest level of unsold condo inventory in years?
Hmm.
Yeah, so according to Rennie and Associates, so for people that don't know, Rennie and Associates, it's a real estate firm, a very prominent real estate firm in Vancouver. They're kind of they're regarded in our industry as the condo king because they've been a significant player in that category in the market for decades, right? So according to Rennie and Associates, the unsold condo inventory is projected to rise by over 60% from
Wow.
just over 2,100 units to 3,500 units by year end.
Is that because of the completion of all these pre-sales?
It's
in
taking
development?
into account everything. There has been a surge of, of course, investors as well, just releasing condos as a rental investment because they're just with the not rental restrictions, sorry, with the cap rates being set and all of that sort of stuff. It's not as lucrative anymore to hold those properties as investment properties. We're going to kind of go off topic, but most investors have moved away from holding individual condos as investment and they moved into multifamily,
Yeah.
right? So they moved into duplexes, they moved into fourplexes and stuff like that. That's where the dollars and cents now work out again. So to get us back on track, yeah, that's the reason why. So they've flooded the market with that inventory. So now, again, it goes into that quote unquote balanced market that we like to kind of say that we're in, right? That's what we're saying. The numbers are telling a different story because of course more homes hitting the market than are being sold right now, which are of course they're already leading to pricing pressures within the condo market, right? We're seeing construction delays in the pre-sale market because you can't put product on the market when it's already oversaturated. It's not going to sell, right? So it's got delays in the construction and shifts in how, right? Of course, how housing serves our buyers and renters now, right? Because we're now looking at putting together affordable renting complexes, right? Where it's publicly ran or will have company ran multi-unit complexes. So again, that's what's driving, I guess, these 3,500 units. So what they were saying was they warn that this trajectory will have long-term implications, not just for what gets built next, but also for affordability and growth planning across the region, which I thought was very interesting. And so, of course, slower pre-sales and investor uncertainty suggests that inventory will remain a challenge going forward.
Well, as you're saying this, I'm just thinking about the housing issue that we've been
Yeah,
talking about for for however long.
right.
I don't think there's a housing issue anymore because it seems like there's a
Issue now,
surplus of
right.
housing, and yet nobody seems to be wanting to buy.
Well,
So
and here's this dichotomy because we have sellers that are reluctant to move on their price, right? So again, this is where we've spoke about this now since January. Well, actually, I'm going to say since November. We've been dealing with prices that buyers are hesitant, are not ready to budge on their dollar, and sellers aren't willing to sit on their dollar. And we spoke about the stats where it was only what a 0.2% change year over year in the dollar value,
yeah,
right? So when you don't have either side moving, you get a stall. That's where your inventory just keeps raising and raising and raising, and that's all that's going to happen is and what sellers of course need to understand is at some point they are just going to lose.
yeah.
Once inventory just hits it max, they can't hold out much longer, right? So at this point, it's best sometimes you take what's presented to you. It's not a matter of giving the product away, but it's a matter of understanding that there's a difference between an acceptable profit and a I would say dreaming or a wishful profit,
Well,
right?
what have we said? The market dictates the price.
Exactly.
So if
Exactly.
we're and to the sellers, like I know that there's a lot of realtors that I speak with out there, and the sellers are just unwilling to move on their price because they are stuck on a price that is no longer a fair market value.
Right.
To your point, if they don't adjust to what that fair market value or what the market is dictating, they are going to lose because they're just not going to sell and it's just not going to move,
It's
right?
not going to move. And what we always say is, and you're if you have a realtor, I hope they've explained this to you. If you've mispriced your home,
Yeah.
then you're going to constantly chase down the market. And that's the worst thing you can do when you're chasing the market down. You have no leverage because now anybody that's in negotiations with you knows that you're going to have to sell it because you're just dropping your price. So you're going to give up at some point. And then the other problem is you give off an air that there could be a problem with your unit. So even just you give off the illusion that why are they just continually dropping the prices? There's something wrong with that unit. Maybe I'll just take a look at this one that's already priced at X number and looks this way.
Well, and the other thing too is like if we are in a buyer's market and there is a lot of inventory going on sale, and this is where we go back to power teams, and again, understanding even on your side, Allister, 75% of realtors did not sell one single home last year. Now,
As somebody in the industry, that just wows me. It's crazy.
so in saying that, when somebody is putting their house on the market, and there are, I don't know, I think there's 25,000 plus realtors in the greater Vancouver area or something redonkulous.
Yeah, yeah.
And again, as a seller, you do want to interview your realtors as far as who's going to represent the sale. But if you're a seller and you have a price stuck into your mind and you're working with a realtor that hasn't done their homework, right, and understands what the fair market value is, and just tells you what you want to hear because they want to basically be the listing realtor, you are actually, as a seller, you are actually, and this goes back to your point, you are setting yourself up for failure because you are not listening to what the market is dictating. You're listening to what you want to hear. For whatever reason, that realtor is telling you what you want to hear. You choose to go with that realtor, and then for whatever, and then you are confused why there's price reductions and why your house is on the market for a longer period of time. And this is the funny thing is that again, speaking with realtors who are going into these interviewing processes,
yep,
and they are saying, hey, this is what your home is going to sell for, this is what I would suggest that you sell for. That seller then decides to go with another realtor that says, hey, this is what I think you can sell for, which is what they wanted to hear. And then when that property does get sold, it's exactly for the price that realtor that did the fair market analysis on it, it's the exact same price as what they said.
So that's why I was letting you speak. So I of course go through these listing conversations with clients quite often, and it's one of the things that I actually caution them on. So there's a trick, everybody out there, that realtors always use, and it's accepting what you say as okay. Absolutely, we'll list it at this price, knowing that there is an absolutely zero way that it's going to sell it. Because what they're going to do is try to talk you into dropping down the price in a couple of weeks. Well, here's the thing, people. They just cost you 2 weeks. And in fact, once again now, they put a possible stigma on your property because now you may not be viewed as somebody that has something wrong with the property. What you are viewed as a seller, as somebody that's unrealistic in negotiations, right? So now other realtors like me will say, you know what? They tried it at this price. Of course, this was wishful. The person that they've gone with didn't do his market research. This is what I tell buyers, right? And I'll say, you know what? These are people I think they're just hopeful for their price. You know what? Why don't we look at this similar property that gives us all the same things? This realtor did his homework, priced it at fair market value. This way we know if we get into negotiations with somebody, this will be a smoother ride than this property.
Yeah.
So now we've just taken your property out. Yeah. And that's what good realtors, for everybody out there, that's what they do.
Well, and again, just speaking on your point, is that people want to do business with reputable people, right? So I know, and I don't want to speak for you, but I'm sure, Allister, when you are looking at homes and you will recognize a reputable realtor, you want to work with that realtor because you know it's going to be seamless versus somebody that may not
100%.
have the experience. Again, 75% of realtors haven't sold one home last
Yep.
year, or someone that basically lacks the knowledge. Again, to your point, as a seller, you might be setting yourself up for disaster if you're not picking the right person to work with.
And it's true. And here's another misnomer, people. A lot of the time, well, not a lot of times, some of the times, I'll say, some of the times, the price doesn't actually always dictate the sale. There are times I will sit down with my clients and I will say, hey guys, listen, here are our two offers. They're very close in dollar value. Here's the difference. I have done quite a few deals with this agent in the past, and I know that when I can count on them for X, Y, and Z, that I know there will never be a problem throughout the course of this transaction because they always have their ducks in a row. This person I may not have done a deal with, or I may have heard things, or just may not have gotten a good feeling, right? And we'll go with the other one, which could be less price, which could be actually less than what that other offer was. But the reputation of that other realtor is what pulled that other offer over the line.
Yeah.
It happens a lot of the times, guys. So it's a lot of people like to think it's all about the dollars and it's all about the terms. Well, yes, those are very, very big factors. There are your representation actually carries a lot of weight on it too, because you got to think too, if you've got a realtor, if you've got somebody that represents you and they're a realtor that, let's say, constantly brings to the table lower than market value offers, realtors will say, listen, I don't want you to bring me an offer. Please. I can't deal with you because you don't bring me serious offers. I don't have time to deliver these to my clients to sit down when we both know your clients aren't going to say it. Oh, but Allister, this may be, listen, right? And so again, it all goes back to making sure you interview your people properly. But I knew this would go off the rails, Geoff. I knew this would go off the rails. I wanted to say though, we've got a lot of inventory though going on in Metro Vancouver in the condo market. And that is, like we said, when we talk about a balanced market, yes, it's shifted a bit over to the buyer side. We are seeing it being, moderately busy in townhomes. Detached homes, guys, in a lot of areas, super, super busy. So it is that condo market that is severely weighing those numbers down, right? So that's, again, when you're sitting down and you're talking with whomever you've chosen as your representation, ask them, where is that number, right? What does my product look like within that 11% balanced market that we're in right now?
And again,
right?
your pricing is so important because there is so much inventory.
Exactly. But yeah, man. Yeah. Oh, and another thing on the tariffs. I just wanted to pop this quick thing on the tariffs because everybody's been following, this thing has just been bananas. So on Monday, 2 days ago now, Walmart, Target, and Home Depot, the CEOs of those three companies, got a hold of Trump and told him to stop it with the tariffs. What they did was they warned him that these tariffs aren't just, because the issue is everybody's just assumed that the price is going to go up. And Trump has been saying the price isn't going up. We're not seeing a rise in prices. And what they're sitting there telling him is, listen, buddy, they're not happening yet. They're going to happen very soon. And on top of this, which isn't the price, isn't the bad part, Mr. President. The bad part is these tariffs are going to affect supply distribution and effectively end up in empty shelves in our stores. So these tariffs, it won't be a pricing issue. It'll literally be an issue of our stores will be empty.
Yeah.
because the tariffs are causing supply distribution issues.
Yeah.
So
Yeah.
that is why now, to yesterday, Trump has turned around and completely softened his stance, which in turn has taken, what was it, 40% of his back room there, and gone nuts on Trump because they're saying you can't turn back on what we set out. But again, it's because who is the senator that they've got getting in his ear now? 1 second, I'm just having a lot of fun reading about or knowing about this. What was the guy? Senator Scott Bessent. So he is the guy, the Treasury guy. Scott Bessent has been now running and chasing into the Oval Office when it's empty and just Trump is in there, trying to influence him to get him to ease off on the tariffs for the sake of the market. So because Trump is a guy that listens to the last person, that's the type of mind he has. He listens to the last person that has his ear. That is what the Treasury, the Secretary of Treasury is doing now. He's running in to the Oval Office when nobody's there to tell him things. So he's the last person he listened to. That is where we're at, folks. That is where we're at. I was right, just so you know. I don't like saying I was right, but I was right that Trump has no idea how these tariffs actually affect the economy, that when he did this, that he would be told that it couldn't last and wouldn't last and would be quickly put in his place. It has not been long, and we are still going to see tariffs because they're going to capitulate a little bit. What it is it is going to be at a whole lot more or less significant of a degree.
Well, and I think also on that, let's not count our eggs or our chickens.
Our chickens before they're hatched. That's what I'm saying. Yeah.
So let's just say we are heading in the right direction.
Yep.
Let's have a wait to see, because I also think how our election is going to dictate the results of that as well, right?
I have a true belief. I sat down with a lot of my fellow conservatives who have now switched, now sit as independents. And we now have a very good belief that the country will be put in the hands of the person that should have it.
Okay. Well,
I'm not saying who I'm voting for. All I'm saying is I was a conservative. I'm now an independent. And I'm saying that my belief is that it is going to go into the hands of somebody that deserves it. I don't believe that the current holder of the Conservative Party deserves to have our country in his hands. That's all I'm saying.
There's so much stuff going in there. I'm going to reserve comment on all of that for now.
That's all I'm saying, but there is quite a number of the Conservative Party that has moved into independence. We all have a little bit of a WhatsApp group, and we range from British Columbia all the way out to Newfoundland and PEI. It's fun. So,
well, we're going to know in 5 days.
Yes, we are. Get out there and vote. Forget the rhetoric, people. Forget the rhetoric. All right. Listen to the people that say we will lead. If the US doesn't want to lead, Canada will. That is the person that we should listen to. The person that said those words. That's all I'm saying.
All right. Well, let's get into some other fun stuff. So as they say, bad economic news is good news for interest rates.
Yes.
And what I wanted to kind of talk about and share with you, or my did you know, actually we should do
did you know it's on the mortgage end, right?
Right. But here's the thing, folks. One of the only questions, I won't say the only, one of the first questions that people ask when they're always getting a mortgage, be it a refinance, be it a purchase, be it a renewal. Guess what that question is, Allister?
Geoff, what's my rate?
Right.
Yeah.
And I thought it was actually really good timing to talk about rates. Just give you kind of what a rate range is as of today.
And Geoff, just to kind of pause you on that, that is actually the second question that we as realtors get. We get, how's the market? And then we get, what's the rates?
What's the rates? Yeah.
Yeah.
And sometimes that's the only question that we get,
True.
which is
Yeah.
also a big flag, right? Because I always tell people there are more to a mortgage product than just the rate. There's the personality of that mortgage product.
Yeah.
What are the portability options? Can you blend stand? What is the penalty to break it? How is the penalty calculated? So rates are one of those conversations that everybody asks. And I wanted to kind of dig a little bit deeper into what a rate is these days, and that it's not as simple as I have 20% down or I have less than 20% down, and then here are your two rates.
And I think that's part, and I'm glad that this is what we're going to dive into this because I think that that is the most confusing piece for people is they see a rate of, let's say 5.4, right? And they're like, okay, great. Sounds like a good rate for me. I'm going to go get it. And then they walk in to say, I'd like this rate of 5.4.
Yeah.
And then they're told, well, no, you can't have that one. And they're like, well, wait, why? Right. So I'm glad like this, I think, is a very, very important conversation.
Well, not so long ago, rates were a pretty easy conversation to have. Do you want a fixed rate? Do you want a variable rate? The next question is, well, how much do you have down? I have less than 20% down. That was called a high ratio mortgage. Here is your rate for fixed and variable. I have 20% or more down. That's called a conventional mortgage. Here is your rate for your fixed or variable. Away you go.
Right.
Today, not so simple. So today, folks, as of today, which is April 23rd, 2025, the rate range, if somebody was to ask, is anywhere from 3.89 to 5.45%. And then people are going to say, well, what do you mean 3.89 to 5.45? That's quite a spread. And this is where we now need to understand that when it comes to rates, there are 4 buckets of rates. Okay. And within this rate range, we need to determine what bucket that you're falling into. And within this bucket will determine the rate. Just having an open-ended conversation, what is the rate? There's 8 different rates that you could fall into, right? So it's not so simple anymore to say, you want a fixed or a variable? Okay. And how much do you have down?
So can I ask why they changed it? Can I ask why they changed it up? Was there a reason for that?
You know what? That's one of these questions where I really don't know the answer.
Okay.
Outside of, again, if we talk about the stress test, it's about safeguarding the borrowers and the risk of the lenders. But when it comes down to when we're talking about rates in today, 2025, there are 4 buckets of rates that compile 8 different sets of rates that you may be subject to, right?
That's crazy.
And here are the buckets. There's a bucket called the insured bucket. Now, the insured bucket means that you're going to live in it. The property is less than $1.5 million. You're putting down less than 20%, and it's being insured by either Sagan, Canada Guarantee, or CMHC. Thus, it's called the insured bucket.
Right.
Then there's another bucket called the insurable bucket. And now the insurable bucket means you're purchasing something that's less than $1 million and you have 20% or more to put down and you're using a 25-year amortization. Within this bucket, Alistair, there's a rate if you put down 20%.
Okay.
There's a rate if you put down 25%. There's another rate if you put down 30%. And then there's another rate if you put down 35%. And the reason this is called the insurable bucket is because either Sagan, Canada Guarantee, or CMHC has insurance on that mortgage. Thus, one of the reasons why the purchase price can't be more than $1 million.
So they're also they're providing an insurance you can purchase, or they're actually insuring that mortgage still.
They're actually insuring that mortgage. So people
Okay.
say, well, I'm putting down 20% or more down. To my understanding, there is no insurance on it.
Okay.
Well,
Yeah.
again, back in the day, depending on the property type, that is correct.
Right.
As of today, the insurable bucket applies to anybody that has a purchase that's less than $1 million and you're putting down a minimum of 20%. The lenders will put insurance on those mortgages. So again, within this bucket, the insurable bucket, there is a rate for 20% down. There is a rate for 25% down. There is a rate for 30% down. And then there's another rate if you put down 35%. So again, there's 4 different sets of rates in this insurable bucket. And again, insurable means that it's insured by one of the 3 insurers here in Canada, be it Sagan, Canada Guarantee, or CMHC. Now, the third bucket is called the uninsurable bucket.
Yeah.
The reason
The one
why
that I think I'm most common with.
Right.
You're right. Yeah.
And the reason why it's called an uninsurable bucket, because there is no insurance coming from Sagan, Canada Guarantee, or CMHC.
Right.
So the uninsurable bucket means you're purchasing something with 20% down and using a 30-year amortization, and or that purchase is $1.5 million or more. So within this bucket, when it's uninsured, then you have a choice of a 25-year amortization or a 30-year amortization. And if you choose a 25-year amortization, there's a rate for that. And if you choose a 30-year amortization within this bucket, there is a rate for that.
Right.
So again, we've talked about 3 buckets.
Yeah.
And now we've talked about 7 different types of rates depending on the bucket that you're falling into.
So can we pause for a second and explain insurable mortgages? And so and the pros and cons, do we have time for that? Or is that going to be another pod?
Well, let's talk about the last bucket.
Okay, let's talk about the last bucket.
And then we can jump into that.
Okay.
The last bucket is for people that are purchasing properties that are going to be rentals and or investments where there's a rental component to it. Okay?
Right.
That bucket is called your investment bucket. That bucket is meaning you're buying a rental property or an investment property that you are going to be receiving rent from.
Yeah.
That investment bucket means you're putting down a minimum of 20%. And then again, because it's an investment property, there again is another set of rates for that.
Yeah, you got to pay more people.
So again, when people will ask you, Allister, as the second question, what is the rate? Well, what bucket do you fall into?
Right? Well, that's what I say to them now. You taught me that. You taught me that lingo a while ago, but that is what I say. And I say, but you know what? It's a great question. Here, I gotta have you talk to my guy, Geoff. That's how I have that question now, because to your point, it's a long discussion. One that, guys, as realtors, we're not equipped to have. Like, let's be serious, right? We have to take that silly little mortgage piece in the exam that once we get into our first 2 days during the instruction class with BCREA, they tell us that if we give any mortgage advice, we can be sued. Yeah. So we're sitting there, we're like, why did we have to learn any of the mortgage information for our license when we are legitimately told as soon as we give any type of mortgage advice, you are held liable?
Right.
Right.
Well, and that's the thing is that, again, I just go back to that stat of 75% of realtors haven't sold one property. I can guarantee you 75% of realtors don't understand the bucket of rates, right?
No, I'll guarantee you that. Yeah, I guarantee you that.
And likewise, as crazy as it sounds, even on the mortgage side of things, again, probably very similar statistics where 75% of mortgage brokers aren't doing anything more than 5 mortgages a year, to understand the buckets of rates. So again, to your question, what is an insured mortgage, right?
Yeah.
An insured mortgage really is that any mortgage product that has insurance on it, either from CMHC, from Sagan, or Canada Guarantee. There's three insurers here in Canada. And an insured mortgage or an insurable mortgage just simply means that the lender has CMHC insurance on it. So it protects the lender that if it goes into default or if it goes into foreclosure, it has that insurance on it, where basically if the insurer pays out to the lender, and then that insurer goes after you, the borrower, right? Therefore, when you have an insured product, typically your rates are going to be lower than if you have an uninsurable product. Because again, an uninsurable mortgage product means that you have no insurance on it. All the risk falls onto the lender.
Yeah. Yeah. Okay.
So again, rates, folks. Not necessarily a black and white answer, but I thought it was so important just to kind of touch on what rates are as of today. Hey, this is the rate range as of today, 3.89 to 5.45%. But also more importantly, the bucket of rates. And within those buckets, I'm just counting on 1, 2, 3, 4, 5, 6. There's 8 different rates within 4 of these buckets. So again, if anybody is saying, hey, Allister, this is what your rate's going to be, without asking, well, how much is the property?
Yeah.
How much are you putting down? What type of amortization are you going to use? What is the nature of this property? Are you going to be living in it? Are you going to be renting it out?
Yeah.
If they're not asking those qualifying questions, but just giving you, hey, this is what your rate's going to be, you might not necessarily want to work with that person.
Well, it's funny. I was just gonna kind of bring it right back around to what we were talking about earlier with sitting down with a realtor who says that they can sell your home for the exact same price that you want for it without asking you the questions or knowing what the market looks like to be able to say, for sure we can. Here's the numbers and the facts that support why we can achieve that goal for you, or no, Mr. Mrs., you guys are being completely wishful. Same thing as on your end. If a mortgage broker says to you, hey, I can get you this rate of 3.4, no problem. Well, you may want to have a different discussion, because he obviously doesn't have any clue of what bucket you'd fall under. How does he know with that many buckets, that many moving parts? How can he guarantee you that you're going to get 3.4?
Yeah, because that same person is going to come back to you and say, you know what? Actually, this is going to be your rate because you do not qualify for it.
Right. And that's the same thing as the listing realtor. You know what? Sorry, we couldn't get you that price. We're going to have to drop it by $50,000 if you're really going to want to sell it. Oh, just coincides with, hey, I was here a couple of weeks ago and told you you're going to have to list it $50,000 lower.
Yeah. And again, back to our original point from the start of this pod, don't pick the working professional based on what you want to hear. Pick that working professional based on the questions that they're asking you, based on their experience, based on, to be honest, sometimes telling you what you don't want to hear.
That's it.
And you will be moving forward very, very well. If you are picking that working professional based on what you want to hear, I'm going to say a large majority of the time, you're going to end up in disappointment the further you get down the road.
100%. The vast majority of times you will end up not where you want to be. 100%. Because let's be honest, very few of us, I'll just speak on my end, right? Very few of us believe our home is worth market value. we always believe, and rightfully so, that our home is the most amazing place in the world. The things that we've done, nobody else in the world could have done. The memories that we've created are worth, $500,000. It's amazing, right?
It's funny you say that. I just remember a buddy of mine he was dating. I forget what the conversation was, but it was like, we're all way better looking than we think we are, and we're all 10 pounds heavier than we say we are. So I'm like,
Exactly. That's exactly what it is. And so if a realtor is sitting there and agreeing with all of your dreams and or all of your things and saying, yes, those memories that you've created are definitely worth the money you're asking for, that right there is a red flag. Because they should honestly be telling you, yes, Mr. and Mrs. Client, your memories are priceless, but that's the thing. They're priceless to you. There is no actual value to another person. We have to set that aside and say this is the actual value of your property. As much as I'd love to say you're found that those beautiful memories are worth that much, I have to park it on the side this time. That's somebody, pardon me, that's going to give you those hard truths and tell you that what your property is actually worth, rather than agree with you. But yeah, man, is that it though? Is that us?
yeah,
Is that it for us today?
45 minutes in. 45 minutes
We did
in.
good.
By quick.
We did good today. So next week, I thought we were going to have a guest this week. I know, Jeff, we thought we were going to have a guest. Unfortunately, our guest couldn't make it. They got called to a job, which is always good. If they're working, it means that we're giving you good people, right? So unfortunately, they couldn't make it. They'll hopefully be on with us next week. If not, I know we're going to get into fixed versus variable mortgages, which I'm very, very excited about. And I'll have another did you know, right? So thank you everybody once again for joining us today. Oh man, I hope you guys had an amazing Easter once again. I hope you guys enjoy this weekend. My mom's in town next week, so I'm very happy about that. She gets in on Tuesday. Super excited. So with that being said, stay empowered, stay informed, and most importantly, Jeff,
Stay tuned.
that's right, people. We will see you back here next week at the same time. Peace out.